you're going to see here on the screen is you see the tax rates. And what I want to point out to you is that when you have that you're in the 15% tax bracket, take a look at that with the long-term capital gains and qualified dividends tax rate. Those are 0%. So that is an opportunity, if you are in a lower tax bracket, to take advantage of some gains on stock investments and not be taxed on it. Then you'll see we go from the 25 through 35% tax brackets. Then you have that capital gains are taxed at 15%. And then if you are at the highest tax bracket, the 39.6% tax bracket, your capital gains get taxed at 20%. Now there's another tax bracket that's not included in here, and that's called the net investment income tax bracket. And what that is, that's an additional 3.8% tax. We'll be talking about that later on, but that's going to be on long-term capital gains and short-term capital gains and qualified dividends as well. And that's going to be for people if they're single or head of household who make more than $200,000, or if they're married filing joint, they make more than $250,000. The other thing I want to point out on the screen is that take a look. There's something that we call the marriage penalty, and you'll see in terms of the higher the tax bracket, when you go and you are in the 33% tax bracket, actually even starts much lower than that, really in the 28% tax bracket, you start seeing that it's better off, you're better off to be single than filing a married filing joint return if you've got equal income. So once again, just something to point out to you that the marriage penalty for higher income earners is alive and well, which brings me to one of my favorite quotes that comes up here, that every culture has some ritual for joining two people together and making them stay that way, and ours is giving them tax breaks. Well, that's true if they are in a lower income tax bracket, as we can see here, but it's not so true if they're in a higher income tax bracket, which brings us to our next quote that says, the way taxes are, you might as well marry for love. So keep that in mind if you are engaged in doing your tax planning for this next year. So again, what we'd encourage you to do is that if you are in some of these lower income tax brackets, we would encourage you to take advantage of that 0% capital gains tax. I mean, that means you've held stock, maybe it's Apple stock, maybe it's Campbell's Soup stock, who knows what stock it is. But that's potentially gives you that you don't have to pay any type of income tax on that if you are in a low enough income tax bracket.